Aloha and welcome. I'm Digital Micro, and you're on the Digital Micro Trading Journal for February 19th, 2022, day trading for ROI. We're going to talk about two important things: growing your day trade account to at least 100,000. If you're under 100,000, in my opinion, for my journal, 100,000 is make or break by the end of this year. And what I'm going to cover today is the three-step process on how to up your trade size. Because one thing you don't want to have in a day trading business is being undercapitalized. And I think that's why a lot of high percentage of day traders or people that try day trading eventually blow up, is because they never had appropriate day trade account capitalization to begin with. So let's get into it. You've got to understand the first tenet here on the way to a $100,000 account is next level psych. You've got to have the psychology that understands you're going to break some eggs in the process of scaling up trade size. It's just not going to be where you're going to be a master at trading a $50,000, $75,000, or $100,000 account when you started with maybe only $20,000 or $25,000. So breaking some eggs, let's give the three examples on the keys. So the first key to increasing trade size so you can grow your account and make more cash flow is emotional capital. If there's no fuel in the tank and you've got a adverse trade, it's going against you, you're losing money, and it's right happening as soon as you increase your trade size. You just don't have the historic background. It's like going to the gym. How are you going to increase the amount of weight you're lifting if you've not worked up to that size and you don't have that confidence? So emotional capital to trade size is important, that you've got some historic reps. And the next is the mental. The mental is the confidence. That's the underlying understanding that you are going to be okay. Because if you do have to take a loss, if you do get trapped, you know that you've got your system and you've been testing your system. You're trading it with real money. You've had umpteen amounts of trades. So just increasing it incrementally, mental is very much at least a third, if not half. And the last is the trade capital, the actual amount that you increase on each trade. If it's 5% more, 10%, that's actually, in my opinion, the smallest amount. So that's what I'm dealing with, is honing in the next 30 to 45 days an increase of trade capital per trade of at least 10 to 25%, but getting the reps done with a larger amount of weight. So just like the gym, I'm going to lift more. I'm going to be able to be stronger, better, with higher workout performance. You're going to do the same with trading. You're going to get the mental confidence. You're going to be emotionally able to weather the storm. When you've got bad trade, you're going to use your risk management. And so that's going to make you able to increase trade size and keep trading with size. That's the most important. You're going to make money, but keeping the money is priority one. So let's go to the benchmarks. So we've got Friday to Friday close. We start at the top with the micro S&P 500s down almost 1.5% for the week, closing around 43.52. I'm not trading that, but it's always good to find the biggest capitalized blue chip index just to see how that performed. Right below it, the M2K, Russell 2000. If we're going into a recession, if we've got high inflation, if the Fed's going to take the punch bowl away, stop printing money, which that's the jury's out on that one. Note how that had less of a loss. So definitely Russell 2000, I'm going to be very interested to see if that can continue to outperform the technology heavy S&P 500. Crypto, we've got Avalanche, not holder. That crushed the Bitcoin performance, up 5.62%. Again, had it, no longer in it. and then Bitcoin, the blue chip. And yeah, I'm going to start dollar cost averaging, but not as a day trade account, just very small bits of DCA. And note how much of the volatility here, 4.74 down. And again, higher down than the stock market. So that's disturbing that still Bitcoin's not able to, number one, decouple on the down days from the stock market in general. And two, just if it is down, why does it have to be down more? So I'm going to continue to keep these benchmarks on a weekly basis and follow them. But the day trading account, again, the full effort here is on one instrument, and I'm all in on the M2, whether it's selling or whether it's buying. I want to be in cash most of the time and use trade setups to do intraday discretionary day trading. On to the next video segment. This is an example of what I can improve on. This was a late day trade. I've got two charts up of the M2K. On the left, it's a Renko with Keltner and Hama, and on the right, just a basic price action 30-second chart. And below it, I've got some oscillators going on the relative strength. So here's the improvement I need to make. I was done in the first hour of the RTH session and pretty much doing nothing. And then the last 2 hours, I was a watcher, and sure enough, my A appears. And I, on Fridays, have a strict discipline: don't trade after the first hour. But at the same time, if I'm trying to grow the account, if I'm trying to increase size, why am I not taking my A setup with greater amount of size? So this was probably 50, 70% of my normal scale in size, and it was an A setup. So the red arrow denotes what I was looking at on these two charts. So there's three arrows, three reasons why I should have done a 10 to 20% increase and I didn't execute. So again, that's what I'm working on emotionally and mentally to improve. Whether I set the rule on a Friday an hour before the close, I've got to be on taking these A setups, and I've got to do it with increased size. So that's the takeaway on that. Let's go to the Bitcoin. So it's really important for me to look at the technicals on Bitcoin. I'm fascinated with this asset, and for a long-term investment standpoint, a non-day trading type of thing, I do want to follow it this year and slowly build a long-term investment position. Here's the situation on the 24-hour chart as I see it. Number one, look at the January 2021 anchored volume weighted average price, way up there at 46,986, almost 47,000. So we're not there. We were looking like we were marching towards there, and then the news flow, Russia-Ukraine situation closed after the market. Our president comes out with a statement, and then boom, you've got Bitcoin that closing right now as I speak at Bollinger prices below. So that's not bull, that's bear until it can resume back. I will say this, the mid is slanted slightly upward. So to me, we are still slightly with a higher low here. I'm not totally bearish at all. This is maybe even healthy. And we're right at basically the 2022 anchored VWAP. So obviously we want to get above the 2021, but we're at the 2022. And then just taking a look below here at the RSI just gives you double confirmation here. That's not too low. It's not too oversold. And for sure, we could go all the way back down into the third. I wouldn't rule that out, especially if after the Olympics end and we do get some of the potential bad news on potential Russia-Ukraine situation. Yeah, we could get some short-term oversold. But from a long-term investment thesis, I am quite bullish, and I'm putting a few shekels in each month, and this does not look bearish to me on the 24 hours. So there you have it. Really appreciate you guys watching. Please hit the like, hit subscribe if you're not already, and we'll see you on the next vid. Take care.